My name is Tina Hay, founder of Napkin Finance. We're an education company that's dedicated to demystifying money and finance through the power of entertainment and visual learning. The inspiration for Napkin Finance was my own struggle as an MBA student at Harvard. As a visual learner and coming from a liberal arts background, I'm not a numbers person, so I struggled with the abstract, quantitative material for my classes. I started sketching out topics as a personal learning tool and found the sketches resonated with many other people. That was the start of Napkin Finance. We create financial education content using digital napkins, illustrations, videos, and other multimedia. We've started a movement that's empowering millions of people to take control of their finances for the first time and to learn that finance doesn't have to be boring. Today, we're going to be talking about taking control of your finances, especially if you're self-employed. Knowledge is power, and getting educated and organized can have a dramatic impact, not just on your money, but more importantly, having peace of mind. These days, self-employment is the way most of us work. There are serious perks to working for yourself, whether you set out to be your own boss or not. You can set your own schedule, choose your clients, and maybe even work from anywhere in the world. It's hard to beat that kind of lifestyle flexibility. But to make self-employment work, you really have to get a handle on your finances, including your business budget, your tax situation, retirement planning, and much more. Let's dig in. Today we'll talk about 4 areas. First of all, let's start with business budgeting, which is one of the most important. Running a business is a lot like managing your own personal finances. And for it to be sustainable, you need to make sure that you're spending less than you take in. And much like managing your personal budget or your family finances, there can be lots of small but necessary expenses that really can add up. So if you get business budgeting right, it can make everything else, including paying your taxes and saving for retirement, all a lot easier. A budget in general lets you plan and control your business expenses. Even seemingly minor costs like coffee with clients can add up. So here are a few ways that expenses expenses to account for can be overlooked. Number 1, ads and marketing, networking events and client meetings, pre or post COVID, equipment like your computer, phone, legal and accounting help, invoicing software. So here are some budgeting tips. As you get used to working within your business budget, make sure that you do the following. Number 1, review it monthly. 2, compare your budgeted spending to your actual spending to see whether there's room to cut any costs. 3, look for inefficiencies. Consider whether you over or under budgeted in any areas and tighten up your budget so that you can put that money to better use. Next, plan for future costs. So think through the next few months. And are there any big expenses on the horizon? Do you need to pay someone to prepare your tax return? Build these into your budget in advance. Next, our area we'll talk about is taxes. So when you're self-employed, you face a very different tax situation than someone who's an employee. So here's the good, the bad, and the ugly. The good. As a contractor, you can deduct a host of expenses that you wouldn't be able to as an employee. So that's the good. The bad. Thanks to self-employment tax, even after all those deductions, you'll probably end up paying tax at a much higher rate than you would as an employee. And now for the ugly. You may need to consider hiring a professional for help because chances are your taxes will be quite complicated. So let's talk about deductions. So while self-employment taxes may sting at first, deductions can actually ease some of the pain. Some of the extra deductions you may be able to take can include the following. Number 1, a home office and its expenses. Number 2, business meals and entertainment, pre or post COVID, work-related mileage, networking expenses. As a self-employed person, you can deduct many of these business expenses even if you take the standard deduction and don't itemize. Next, let's talk about estimated taxes. So when you're a W-2 employee, your employer withholds taxes from each paycheck you receive, and so you pay your taxes as you go. When you're a 1099 contractor, on the other hand, There's no employer to do this for you. Instead, you have to set aside your federal and tax contributions and submit them every quarter as the estimated taxes. So how much do you pay in estimated taxes? There are two ways and two options you have for figuring out your quarterly taxes. Number one, you can estimate them based on what you owed last year. So if you expected to earn about the same income this year as last year, divide your previous tax bill by 4 to figure out how much to send each quarter. Another option is to estimate them by what you expect to earn this year. So this can be a little bit more accurate of a method and can help you avoid over or underpaying since it's based on current earnings. So if you're not sure how much you owe or maybe struggling to figure out your obligations, consider hiring someone or a tax professional to help you, an accountant or an advisor that can help you make sense of business taxes and advise you on the best way to structure your self-employed future as well. Number 3 topic for today, as a 1099, saving for retirement is critical to consider. So let's go through the steps. Just as with taxes, it's up to you to create your own retirement savings plan when you work for yourself. What does that mean? That means you need to set up your own plan, decide how much to save, and choose your own investments. But don't be dismayed. You have several options when it comes to picking an account type. And all of this may be intimidating, but chances are you'll be fine with any of these. Here's the list. Number 1, a traditional IRA, a pre-tax account that enables you to contribute up to $6,000 a year. Then there's the Roth IRA, an after-tax account that lets you contribute $6,000 per year as well. However, you can only contribute a maximum of $6,000 in a traditional or Roth IRA account combined. Then there's the SEP IRA, a pre-tax account that's unique to self-employed workers and potentially lets you contribute as much as $56,000 a year. Then there's a SEP 401k. So similarly, you can contribute $56,000 a year pre-tax. It can be challenging to jumpstart your retirement savings when you don't have an employer plan or contributor match available to you like an employee. But here are a few ways to reach your retirement goals. Number 1, start as soon as possible. So even if you don't have much cash available, invest whatever you can. The sooner you start earning on any amount, the more you'll have available when you retire. Number 2, increase your contributions annually. So schedule a yearly review to figure out how much more you can put into your savings and investments. Next, challenge yourself to self-match. Set up your own employer match program and challenge yourself to double your monthly contributions. And number 4, our final topic for today is business savings. So just like you need an emergency fund for your personal finances, when you run your own business, it's a great idea to put aside some money in case of emergency from your self-employment earnings into a separate business savings account that can help you get through if you have any lean periods coming up. A business savings account serves several important functions. So number 1, it separates your personal and business finances. Number 2, it helps you build and prepare your savings for downturns or to invest in new opportunities. Next, it can help if you ever need to qualify for a business loan. Working invoice to invoice creates stress for you and can be unstable for anyone's business. But by contributing monthly to a savings account and automating it, you contribute a buffer against sudden big expenses or unknown drops in income. Plus, we've all seen from recent events, life can be unpredictable, and sometimes what happens in your business is completely out of your control. That's why, as with your personal finances, it's important to set aside some savings when business is good, so you'll have a safety net available if you should ever need it. Thank you for your time. For more information, please visit napkinfinance.com or check out our notebook, Napkin Finance, Build Your Wealth in 30 Seconds.